Welcome to Sales Talk for CEOs. I'm glad you're here. I'll be interviewing CEOs who have successfully scaled their B2B sales organization. In each episode, I'll start by uncovering the sales background of each CEO, dig into the strategies they use to build their sales organization, and wrap it up with what the future holds. We'll cover the good, the bad, and the ugly of scaling a sales organization. I'm your host, Alice Hyman. Today, we are going to talk about a topic I know all of the CEOs out there are very interested in. Should my company sell through the channel or direct? In all the years that I've been doing this, I've seen companies who sell through the channel. I've seen companies who sell direct and companies who do a combination of both. All of it presents a challenge, but these challenges are not unsurmountable. There is a way, more than one way. There are ways to really make sure that your channel comes through for you. And we're going to focus on channel sales today. And my guest is Bruce Stuart from CHANNELCORP. Welcome, Bruce.
Thank you very much. It's a pleasure to be here.
So tell us a little bit about what you are specifically focusing on today with your clients.
The focus right now is, just a quick back. We go back to about 1989. We've been focused on international channel issues since that time. Rolling up to 2022, the biggest focus right now is transformation and transition. And there are a couple of different dimensions that are taking place. There are business model transformations taking place in the channel. There are channel strategy transformations taking place in the vendors or the manufacturers. And there's also a form factor or product form transformation taking place in the marketplace. And that's the fundamental transformation from transactional products that you can drop on your foot to cloud-based products that are sold on a recurring revenue basis. So most of our focus is helping people understand not only the mathematics, but the structural issues around making those transformations, all about increasing return on invested capital and the valuations of corporations moving forward. So Alice, that's where we're going right now.
And you and I focus really on the same end result. Increase the sales to increase the valuation, because that's what the owners of these companies want. And of course, their investors as well. Now, thinking about the fact that everybody wants recurring revenue these days, right? They're trying to figure out how to make footwear into recurring revenue. Everybody's got just even, business to consumer boxes that you receive every month full of goods, right? Everybody wants a recurring revenue model. But in the business to business world, where there's a complex sale, where you and I live, where companies are selling to these small companies we work with are selling to companies 10 to 1,000 times their size and trying, to really make a dent in the marketplace. They're out there not only trying to, have this recurring revenue, but decide, should we sell through the channel or should we sell direct or should we do both? And from startup to 20, 30-year-old companies, I see this as the question continuously. So let's start there, Bruce. How would a company decide if their products and services would be a good fit for channel sales, or they should stick with direct?
Excellent question. Good place to start. It all starts with the money. This is a conversation about money.
Yeah.
And the place we start is we take a look at transaction costs and we take a look at transaction yields. And when you're selling the 1% or 2% of your transactions that generate 70 to 80% of your revenue, generally, unless you're doing something really wrong, the yield, the gross margin dollar yield on those transactions is in excess of the transaction cost, even when you load it up with the cost of your direct sales force. As you go down that triangle that we've all seen in terms of percentage of revenue and size of transaction, we start to move into what I call a no man's land, where the transaction cost for the corporation using a direct sales force and the transaction yield measured in gross margin dollars, it starts to get iffy in terms of whether or not that's a profitable transaction. Once you start to get into that zone as a CEO, he or she has to really start thinking about trying to get their sales motions onto a different cost curve. And that's what channels are all about. Channels are all about contracting out functionality, things that have to take place in the marketplace, and taking functions that you previously did in-house, and the deals were big enough to pay for it, and contracting out those functions to capable partners, capable channel partners, turning fixed costs into variable costs so you can actually get the cost curve associated with gathering the revenue down. So it all starts with the mathematics. It all starts with a real focus on what can you afford to do, what's the size of your organization, and there's that added wrinkle of whether or not you're still selling products or whether or not you're essentially selling recurring revenue, in which case you've got a different set of mathematics. But it all comes down to the money, and it all comes down to understanding your costs and your cost per order dollar and some of those types of things in your business.
Yes. So that math has to be done. And I think what happens is sometimes people get the idea that they're just going to go after the channel because the channel people already have the relationships and that will make lead generation easier. So tell us why that might be a pitfall.
Well, it's a pitfall because the relationships that your potential channel partners have with their end user customers is the biggest asset they have. Now, in order to get access to that asset, there has to be a viable business proposition for me, a channel partner, to give up to you, a vendor or a manufacturer, access to that. And if you want to rent access to my customers, which is the way I see it as a channel partner, if you want to rent access to my customers, there needs to be a business proposition that's viable from my perspective. And as a channel partner, I only look at three things. I think of how much I have to invest in you, the vendor, how long is it going to take for that money to come back, and what's the final rate of return. So if you can't have a conversation with me, the channel partner, about the business proposition that your offer provides for me, then let's not even have a conversation because I can't talk to you about anything.
This is so important. And I see this mistake being made all the time. A company decides on some less than correct data, that they should go forward and develop a channel. They haven't really done their homework, right? Like you said, it starts with the numbers. So they go out and try to find channel partners to represent them, and they can't get anybody interested. And they come back and we talk about it, and I say, well, what do you have to offer them? They have this wide variety of products and services that they offer to their coveted, customers that they have great relationships with. And what is going to be in it for them besides the money, right? Because it's not hard. It's not easy to bring in a brand new product and stand behind it. You've got to be able to stand behind it if you're the channel rep, and have that all work so you don't disappoint the people that you have these great relationships with. So I think sometimes the companies looking for the partners just think, well, I have a great product for you to go sell. Why don't you want to pick up my product and just go sell it? And they're not understanding what you just said, which is, look, I have this valuable thing that you want. You have to prove to me that it's worthy and that you'll stand behind it and that the people I sell to have a need for it. And of course, that it's going to work. So this is one of the issues that I see ongoing. And I think that sometimes we get channel partners to sign up with us and then we completely disappoint them because we don't come through with all of those pieces.
Right. So, there's a ton of product out there. You have to make the assumption that there's at least 3 or 4 products out there or services out there that are identical to yours.
Yeah.
And in order to be a complete offering from a vendor or a manufacturer to a channel partner, there needs to be a viable, feasible, scalable, replicable product or service. Plus, there needs to be a business proposition wrapped around it so that if I spend $1 investing in your program, I will generate what I need. And we've got some, the reality is that if a channel partner can't get their money back in 18 to 24 months and can't generate a return on invested capital of 3 to 5 times the prime rate, they're not interested. And it's not up to the channel partner to run the numbers. Like,
Right.
if you want me as a channel partner to write checks, to get people trained, to hire people, to buy inventory, it's up to you to show me the business proposition that I'm stepping into. So, I tell my clients, think franchise, right? That's how good this has to be. Go to a franchise show this weekend and figure out how complete your offering has to be. And if it's not that complete, then it is incomplete and you're going to be disappointed.
Yeah. All right. So let's say we've done the numbers and we've decided that a channel is the right way to go. And the first thing we want to do is go out and look for the channel partners. What should we be looking for?
The first thing you want to do is actually profile the channel partners that you're looking for. And this is the most cost-effective way to find channel partners is to headhunt them. And the easiest way is to go to your end user customers that you want to sell to and find out who they're buying from. And that's the easiest way to figure out what your profile has to look like. So you start this thing with a profile, and you've got issues around what kind of capacity do they have to have, how big do they have to be, what kind of capabilities do they need, marketing, sales, technical, finance, and then what kind of quality are they? What kind of financial quality do they show you? And once you've made a decision around the capacity that you're looking for, the capability you're looking for, and the quality you're looking for, then you can easily go to your end user customers and say, have you seen anybody who looks like this? And they may actually be able to point them out. The other issue is that lost sale analysis from your direct sales force will very often reveal that you're not being beaten by another direct sales force, you're actually being beaten by a channel partner. And maybe you want to work with the channel partner that just beat you on the prior 3 deals. So it all starts with a profile. It all starts with some really focused research on capability, on quality, and on the whole issues around what are you looking for. And once you've figured out what you're looking for, there's lots of ways to find it. But it starts there.
So you get that criteria built, and then you make your short list of the partners that you'd like. And one of the best ways to do that is to ask simply the people who buy, right? What channel partners have sold to them. And I love your idea about, have you lost to any partners lately? Hey, go see if you can work with them. So those are all great ways to get started. So now let's say we're at the next step where we've identified 3 or 4 partners that don't compete with each other, and they're interested in working with us, and we get all the paperwork done. Now we just want them to go sell for us, right? But that's not the way it works. So what do we need to do next?
Well, I think we missed a step.
Okay, rewind.
As part of the profiling, we needed to understand what's the nature of the business proposition, which generally comes out of the channel marketing group within an organization. And we need to, in order to build the business proposition, in order for channel marketing to build the business proposition, your organization within the vendor or the manufacturer has to understand how the potential partners are going to make money with the product or service you want them to sell. So right off the bat, it means your channel marketing people need to know how to count. They need to know the difference between an income statement and a balance sheet, and they need to understand how the offering that you have is going to transform into cash flow for the channel partner. And once we understand that, then we can get to that step that you pointed out, where we sit down and we talk to the channel partner about what has to happen. And there are a couple of things that will have to happen. There is going to have to be some...
Well, actually, hang on, pause for a second, because I have a question for you about that. So let's say I'm a $20 to $50 million company, and I'm going to build this channel. I don't have a channel manager, and I don't have a channel marketing group. So how do we get that part done?
Well, you could, this is a CEO initiative, so he or she has control of the balance sheet. And, if you're going to build a new building, you get an architect in and you put some plans together and you figure out where you're going to get the money to do it, and then you get the thing built. This is no different. We're laying pipe here, right? This is like building a country and laying down a railway in order to increase the size of the company. So this is not a tail on the dog type hobby. If you're serious about building a channel, it's going to have an impact on your balance sheet. You're investing in assets, which unfortunately are going to be expensed, but you need to think about this as an asset build rather than an expense burn. And you may need to buy someone or bring someone within your own organization who may have skill sets to get this job done. And you're going to have to bite the bullet, and it's going to take some investment capital.
Well, Bruce, I see it as a fail point because what I see companies doing is having the VP of sales, right, be the channel manager, okay, you be and then the sales guys end up managing some of the partners, and there's no marketing support because they have a marketing team, but they don't have a channel marketing team. And I think that this makes them unsuccessful with the channel and thinking, oh, that was a failure, when in fact they didn't have what they needed to start with in order to be successful. So I think it can be really dangerous when a senior team decides to put a channel program in place, not understanding you really seriously need some resources for this. You need someone in your company who is the expert on channel and who's going to, like you said, make sure the channel marketing is there and all the pieces that we need to select and onboard someone. That is an expense that I think companies are just simply not, they don't even think about it. Oh, we'll just have the person who leads sales lead the channel.
No, it's very naive. And I see you have selling machine back there, which I would encourage people to pick up if they haven't already. But I'm going to put in a plug for an instruction manual on literally how to do this. Right?
Wonderful.
This is a 250-page instruction manual that goes soup to nuts, gives you the checklist, tells you exactly what your organization has to look like to successfully build a channel out there in the marketplace. And it's written from a technical industrial sales perspective, but even if you're in other marketplaces, just like your book, there's content here that would be good for you. So there's no need to make this up. There's no need for one more unforced error. This is not a hobby. This is a major development in your organization that, if you do it right, will increase return on invested capital and make your company more valuable, which is the only reason we're doing it.
Exactly. And I will put the link to that resource in the show notes so everyone can find that as well. All right. So we have invested, and we understand we've got to have this channel manager. We've got to have this value statement. We've got to have the math right. We've got to have somebody who's going to run it. And so now these partners have agreed to partner with us, right? And they're going to go forth and sell. But it's just not that simple. So what do we have to do next?
So first off, we have to understand the time frames and the investment cycle. So our rule of thumb is it's 6 months to find them, 6 months to grind them, and 12 months until you can go on a holiday and have the revenue come in. So it takes 6 months from the time you figure out what the profile looks like to the time that you've got a contract signed. Yeah. And during that period, you're going to be spending money with no revenue as a manufacturer. Right. It takes 6 months for you to enable them, which could be technical training, it could be sales training, it could be business practices training. So you got another 6 months until they're up and running. So now we're 12 months into this, and then we've got about a year, 6 to 12 months of running them until you and I can go on a holiday and have their projections come in. So this is not like flipping on a light switch. This is a core transformation in the capability of an organization. And just like any other core transformation, it takes investment, and there's going to be some return. And you got to budget for it. You got to think it through ahead of time. Or what happens is you put these jobs in the hands of people who never ever had a capability to do it, or you truncate the activity before it logically has a chance to bear fruit. It's like cutting down a vineyard 2 years into the grow because the
Right.
grapes aren't there. That's a 5-year cycle. Figure it out, do it properly.
This is a huge failure point that I see. People just don't understand, senior teams, CEOs, they do not understand how long it is going to take. You basically said, hey, it's going to be 2 years before you're really seeing the fruits of your labor. In that second year, you should start to see something happening, but it's going to take that amount of time. And what we do is go through all of the get ready part and the expense and everything and bring on these partners, and they don't produce immediately, or maybe we give them 6 months and think they should be producing. But like you said, it's definitely a year before they're going to start producing, and probably closer to 18 months to 2 years where you're really going to have that steady flow. But we just give up too easily because we think, oh, cut our losses, we'll get rid of this partner. They're not producing. So I think that timeline is very, very important. I like what you said. 6 months to find them, 6 months to grind them, and then 12 months before we can go on a vacation and depend on that revenue to come in while we're gone.
So Alice, that's best case, right? If you had crappy profiles in the front end and
Yes.
spent 6 months recruiting the wrong channel partner because nobody thought it through, then you reset to zero. There's no salvage value. And what also happens is your mistakes are broadcast through the marketplace, and your reputation as an incompetent channel organization grows very, very quickly. So if you're going to take this shot, you make sure this thing's lined up, or it'll cost you years. It'll cost you years to be able to redo this. So this thing really needs to be thought through.
I couldn't agree with you more, because I've had organizations where I've come in and looked at their channel partners and, ranked and rated them. And, we've talked about what should happen next. And they say, oh, well, these guys don't produce much, but it's not hurting us. And I'm always like, oh no, it is absolutely hurting you. You can't have channel partners out there in the marketplace that are not performing, because just as you said, they can damage your reputation. So it is really important to make sure you choose well, onboard well, continue to work with them to help them be successful, because having them just out there floating around is not helping you, and it is, despite what you may think, hurting you.
The worst thing you can have is an incompetent channel partner making a successful sale for you out in the marketplace. Because you can guarantee it will be unsupported, perhaps because there's no money in the support. It will be unsupported, and there's only one name that sticks on the product or the service, and that's yours. And that's who they'll come back to. So I couldn't agree with you more there.
Absolutely. So let's talk about success with onboarding. We've all agreed to everything, and we're going to get started. So we've got this 6 months to grind them, right? So we've got to help them understand, of course, the way of our company, our culture, our products, and really provide them with everything they need. So what should that onboarding look like?
It should look like a franchise introduction program. So it's an adult education program, and it's an adult education program that establishes the vendor or the manufacturer's expectations as to how capable the organization that they recruited has to be, and what we're going to be looking for and where we can help you. So there clearly will be a marketing component. This is how demand is generated for the product. This is what you do. This is what I'm going to do. There is a sales component. These are the characteristics of a salesperson, and these are the courses that we are going to provide to you that they will need to pass to get forward. These are the operational issues. This is what we believe this business will look like for you. This is what you are likely to see from an income statement. This is likely to be the balance sheet that this business is going to create. And this is going to be the pattern of cash flows. This is when your money goes in. This is when your money comes out. And this is the amount of time that you're at risk. So there are no surprises. Now, if as a vendor you can't deliver that information, you're not ready to bring on a partner because
Yeah.
there's no reason for them to invest.
I totally agree. I just see it go awry so many times. The company isn't ready. The partner comes on not knowing that or not really understanding what they need. I've seen many channel partners who don't really understand what they need from the company that's supplying the products or services in order to be successful. They don't really know themselves.
And it's not up to the partner, right?
Right.
If a vendor is proactively moving into the marketplace to build a group of channel partners into a portfolio, it's
Yeah.
up to them to know what they're looking for, to know what these folks have to do, to understand their economics, and to flow it through in a complete package so we've got mutual success. That's whose
Yeah.
job it is.
Yeah.
And if you don't have anybody in your organization to do that job, it's not going to get done. It's straight
That
out.
absolutely will not get done and will have a failed channel program. All right, so let's say we have all the things that we needed and we did get them up to speed properly in that 6 months. Then what should it look like ongoing? I mean, you've got a channel manager or channel managers, depending on how many partners you're trying to manage. And you want to keep in touch with them. You don't want to pester them, what did you sell? What did you sell? But you do have to understand how you can help them ongoing. You've got to provide some intermittent training for them. And especially when there's any new product rollouts, you've got to support them in the sales that they're making. So let's talk a little bit about what a really good channel manager now does once they have their set of partners that they are managing.
Right. So let's talk a little bit before that about the organizational structure that we're building. And there are
Okay.
essentially three different structures. You can run a geographic based structure
Hmm.
where you put a channel manager into a territory and he or she has to deal with everybody in the territory, regardless of the business model that the channel partner is operating. So that requires a channel manager who not only understands the product or service that needs to be sold, they also need to have quite a bit of breadth and depth in terms of the business model. So that's one organization. The other organization could be product focused. So I could
Right.
have an organization that has multiple channels, different channels, because I have different products. So I have different channel managers for different products, and they may go across geographies. They might even sell into the same channel partner if it's a big channel partner. That's a problem in and of itself. And then what we have is we have channel managers that are specialized on business models. So you could have a channel manager who works with channel partners who sell your product in a legacy form, let's say a piece of on-premise software. You could have other channel managers who just focus on your new cloud channel partners. And the reason you've specialized in those different business models is because they're entirely different. So there is we call this channel architecture. There clearly is an architectural decision that has to be made. They're scale related, they're resource related, and time and money are interchangeable here. The more money you want to throw at this, the shorter the time frames are. So if you don't have a lot of time and you don't have a lot of money, you've got to get really, really focused. In that case, in an ideal world, our people are almost integrated into the selling and marketing organization. So this whole notion of channel manager as clerk, gone. The channel manager, I would encourage your listeners to think about channel manager as trusted business advisor. Like
Yes.
I can get your product anywhere, but what I can't get is I can't get a clear understanding of how to make money with your product, and that's what I'm going to rely on my channel manager for. Now, clearly that's scale related, depends on how big the deals are that we're doing, but
Right.
generally the focus with my clients is we are moving to channel managers that are more trusted business advisors. And in the book, for instance, we have a 30-question business acumen quiz that if a channel manager can't get 25 or more out of 30, they probably shouldn't even be in front of a channel partner because they
There you
don't
go.
know enough about the business.
Right.
So
Yeah.
that's the
Yeah.
challenge here. We've gone from channel manager as clerk
Right.
channel manager as active participant in the channel partner's business. And that takes a certain style, but it clearly takes a level of competency and a level of skill set that probably is not found in the direct sales force of the company.
Right.
Point is that by retreading, years ago, what we used to do is take the low performing direct salespeople and we throw them into the channel. You
Yeah.
can't get away with that anymore.
No.
It's not happening.
No, absolutely not. It's a specialty and people need to be trained to do it well. And I think that piece about bringing the insight and really being that trusted advisor to the channel partners is what makes a truly good channel manager. I think that's so important. With the companies trying to do this, I've seen again people managing the channel as you said, they're just clerks, they're just clerical, they're just, I call them once a week, once a month, and have a chat with them, or I do these things, or I send these things, but that is not really managing the channel. And I think that again, it's another fail point, right? So your channel isn't performing. Look at your channel manager. Are they trained to do the job adequately? The answer is probably not, right? Especially not in today's world. Maybe 20 years ago, what they're doing would have worked to manage the channel, but not anymore. So I think that's the key there. All right, well, we're just wrapping up here, and let's leave the audience of CEOs and those who support CEOs with a couple of things to think about now that they've heard us talk about how they decide should they use a channel or not. How do they make that partner understand the money part of it, right? The numbers have to all work, and providing the value, providing the marketing behind it, providing a true program for the partners that they want to engage in. And then, of course, onboarding them appropriately, and then having people to manage them properly ongoing, right? So that's what we have. Now, once that machine is all going, how often should we take a look at it to decide, keep these partners, let these partners go, and making the adjustments that would be needed?
Well, I think it's constantly a work in process. And the reason that is because the business models of your partners are forever changing, which makes an impact. The strategies of your competitors and the resources that your competitors are dropping into the market are always changing. Your people are always changing. You're either upskilling or downskilling. And your, as a CEO, your objectives for the organization are always changing. So it's one of those things that you want to be thinking about. The CEOs want to be looking at data. They want to be looking at dashboards that are giving them some insights. But the organization has to be prepared to move very, very quickly. Now, what I can say is, anytime there is a merger or an acquisition in your industry, you have to look at your channel strategy. Anytime a new product or a new technology has been thrown into your industry, you need to look at your channel strategy. And anytime you, as an organization, are introducing a new product or a new service, you need to look at your channel strategy. And anytime you see consolidation within your channel partners, you need to look at your channel strategy. So those are external flags that when we see those red flags, we need to go to school. And really, the only thing I would leave with your listeners before we go today is you need to do your homework. You really need, if you spend a little money on a book and read a book and think about it, you need to do your homework. We see lots of people out there. It was a back of the envelope decision. It had no budget. It had no time frame. We reallocated people who weren't doing very well anyhow, and we're very disappointed when nobody wants to invest with us. Who would invest with you? So do your homework. You need to do this at least as well as you do the rest of your business, or you have no business doing this.
Well, on that note, Bruce, thank you so much. This talk was very informative for everyone out there listening. It's something I know that's on everyone's mind, especially right now, coming into some uncertain economic times. People are thinking of laying people off, including laying off salespeople, and thinking, well, maybe we should go through the channel. So they should listen to this first, absolutely, before they do that. I can't thank you enough for your time. I will hold that book up again so we can see it. And I'm going to put that resource in our show notes so everybody can get a hold of that. And Bruce, I really thank you very much for all the information.
Alice, we can take a year to 2 years out of the learning curve of your audience
Yes,
with this book. Have a great,
100%.
have a great weekend.
100%.
Thank
Thanks for tuning in to Sales Talk for CEOs. You can find me at alicehyman.com. Be sure and connect with me on LinkedIn and let me know that you heard the show. If you found value in today's episode, please subscribe, write a review, and share the show with another CEO.